Shaires is a AIM-listed company that's going to be invested in a concentrated portfolio of AI securities and stocks, frontier edge companies that we believe have a very, very long and bright future ahead of them, getting access at points well before they go public individually and getting the transparency, the governance, and the liquidity that the AIM market provides. This is the third time I'm sort of seeing this megatrend move occur. Obviously, all the press and the talk has been around the large models and the LLMs, and a lot of the big names there are taking up a lot of the space. The other thing that's getting, particularly popular is the bricks and mortar, or the picks and shovels. So the infrastructure behind it, behind the compute power, the chips, and the energy infrastructure and the data centers that's required to support all of this. I think now what we're starting to see is a declaration of a fully vertically integrated stack of the larger frontier companies trying to build, if you're in the model business, to get into the chip business, and if you're in the chip business, to get into the services business, and so on and so forth. So there's a confluence that's occurring. What you're getting exposure to are the frontier AI companies, household names that we think are already extremely well established, the leaders in their space, and on a hyper-growth trajectory. We have gotten exclusive access to those high-quality companies because of our relationships and because we were there when they were younger and still maturing, and as a consequence have a direct pipeline into a variety of them. In our experience, it has been more prudent to have a defined, concentrated portfolio rather than be the jack of all trades. So we expect that our portfolio will be a reasonably concentrated holding of 15 to 30 portfolio companies, and looking for the last segment of growth before they get to the stage of going public themselves. And so we think we have a pretty intriguing portfolio shaping up to cover all what we think are the mega trends occurring because of the evolution of AI. It's largely through relationships and having a very reputable track record that we are long-term investors and custodians of value, both for our stakeholders, ourselves, and the companies themselves, and have entered into strategic partnerships with several of these companies that over time needed liquidity and access to capital well in advance of their initial public offerings. In these new frontiers of fintech and AI companies, London and Europe have actually, on one side, generated and built some pretty interesting companies on the continent, but have not participated in the big capital formation that has occurred. We always like to look at places where we can fill a need, and I think we'd like to be a part of the return of London. All of us on the team have had multiple decades of experience. Board members have had multiple decades of being at the frontier of the new technology revolution. I have been a professional investor, and before that an investment banker, taking companies public, mostly in the US. So our convergence, having been co-investors in a bunch of these private companies ourselves, puts us in very, very good stead to be able to provide that access as broadly as we can in the most responsible and consistent fashion. What is happening today is a lot of the high growth, high valuation increases are actually occurring while they're still private. And the public markets provide a liquidity mechanism, but not a repricing mechanism, if you know what I mean. And so as a consequence, the retail shareholders are arriving a little bit later. But there's substantial value creation happening while these companies are still private. And the ultra high net worth people have had access to this through a variety of different vehicles. And now we'd like to democratize that and take it to the average retail investor.